All right, guys. The Fed did it. They did it. I told you exactly what they were going to do. They did exactly what I said. Now, it doesn't mean they're listening to me. It just means they're that kind of predictable academics. Really, that's what it is. Predictable academics. So there's a few things we're going to talk about here on the Fed raising rates, 75 basis points. There were some people who thought maybe they'd do 100. I was pretty sure 75 would do it. 75 would do it because they haven't said yet. I haven't seen them say yet. Or I think Powell is still testifying, actually, or speaking, testifying. Testify. So they haven't said anything yet about sort of the recessing of inflation or any deflation. They're just saying, hey, it's working. They're kind of giving it vaguely stating like, oh, it's working. And the reason for that is because, remember, these are academics, and they will only tell you numbers if the numbers are finalized. They won't say, oh, the numbers on this are looking good. It's reading this. They won't do that. It has to be completely in stone before they'll talk about it. But they are seeing progress on inflation. And that's the reason why Powell said that the Fed could slow the pace of the rate hikes. Now, that's the reason that the markets have jumped here. And that was sort of what we were expecting to take place today is, hey, they're going to know, the Fed is going to know coming into today, as I mentioned before, that things are easing, that inflation is easing. And so they're going to just do 75. They're not going to do 100, which they did. And they're probably going to say something like this. Hey, we may not need to continue to tighten. We may not need to continue this escalating pace of the fiscal tightening. And I do believe that we're going to see them slow things down. Now, that might mean, there won't be a Fed meeting in August. That's going to be retreat time for them, Jackson Hole. Then in September, they'll come back and they'll probably raise 50 basis points, right? And then maybe in October, they'll do another 50 or 25, and they're going to taper it down. And that's most likely what will happen. As long as the inflation numbers do continue to ease and they see they've actually done something there, that'll allow them time to see it take place and take hold. And so most likely the tightening phase will be over, which could mean party on as far as at least stock market's concerned. Could totally just be like, okay, well, we're going higher.
All we want to do is pump you up.
This also could be true for mortgage bonds. Now, we'll look at this real quick. This one, I got several articles to put in the description today. Some of the stuff, I mean, guys, yeah, there's some really interesting stuff we're going to talk about today, including this information from Blackstone, creating a humongous real estate vehicle for purchasing homes. The Mega Millions is to $1 billion again. Can you believe this? The lottery's $1 billion. Just insane. Everyone who used to talk about crypto now just plays the lotto. Pending home sales fell 20%. We'll talk about that one as well. There's going to be some more stuff with the Fed. I've been reading these articles, obviously, and just looking for like commentary, looking for information that maybe isn't in the headlines that we should know about. So that's why I think you should always read these things. But if we look at today, up 38 basis points, not quite the same kind of day we had the last time they raised 75. And a lot of people were talking about that. Hey, maybe it's priced in. Maybe, the market is already aware of the 75. They're already pricing it in. And I guess they may have to some extent. But if we look here, let's see, you go back. This was the last one. We got a nice pop there on the 75. And then today, not quite the same kind of move. We're not in the 70s. It's not a plus 72 day or whatever. But we are still kind of seeing this trend working in our favor. And that's good. So that is a pretty solid trend where we're seeing higher lows, and seeing nice support here at this really, really important inflection point. And so we bounced off of that. Now we haven't been able to get up here and touch this resistance yet, which is a little bit worrisome. Like, okay, well, if my theory is right that rates are going to drop, we really need to make a move in this direction. And, the Fed saying that, hey, inflation is a little bit under control, that should cause this. But maybe the bond investors want to see a little more progress on inflation before we get those lower rates. That could be what's going on here. By the way, we're live on Twitter, YouTube, Facebook, etc. Drop a comment, say hi. ask a question if you want to. Happy to do that. I will be going on Dan Parker's YouTube channel tonight at 5 p.m. If you want to check that out, we'll be talking about all this stuff in more detail and the specifics as for how it's going to maybe impact the real estate market. Also, the real estate market's been picking up quite a bit. I can't wait to hear what he has to say about it. Just as far as there's more activity starting to loom, and we haven't even gotten through the slow period in the cycle, just the regular annual cycle yet. So real estate market seems like it's really starting to, it just feels like, the worst is behind us on so many fronts right here. And people will say, well, of course you're going to say that because you've been optimistic. You've been bullish about everything. No, I've been bullish about everything because there really wasn't a lot of downside possibility from what I could see. And what downside there was really already baked in. We look at stocks, we're down 35% and crypto's down 80%. I mean, stuff had been hit pretty hard. Now the housing market hasn't been hit that hard. You've seen a few comp bombs here and there. Some people have gotten some deals on some homes, which is, in my opinion, is freaking amazing. Finally, finally people getting some deals on some properties. Hello, let's go. And I'm excited about that. I'm excited that the market is better for buyers. I just don't know how long it can last, especially if we get lower rates, but we'll see. They did tell us, here what changed in the Federal Reserve statement. Really the only thing I think that's even interesting in here is that they're still talking about, Russia impacting, inflation in the United States, which I guess there must be some degree of that, but not really much. It's not like they've stopped selling us oil. They're still selling us oil. Is there anything else we're getting from Russia or Ukraine? I don't know. Recent indicators of spending and production have softened. Nonetheless, job gains have been robust. It's just so funny to me that they use the same document and just hardly change it at all. It's like, guys, rewrite it every time. Come on, don't you have someone on there in your world of academia who's a writer? This was a consensus, by the way. No one disagreed. Every voting member said that they wanted 75 basis points. So there's consensus in the Fed for the action today, which doesn't mean a whole lot other than, it's very likely that next time around there could be more consensus as well to lower, based on what Powell said, that, hey, we think we might be able to pull back on this tightening. Chances are everyone's sort of on the same page about that, which is not a bad thing, especially if you like the stock market going up, because the tightening is what caused the stock market rug pull. And so if that's going to get unwound, probably stocks head higher. This is where I'm probably going to have to cover my short on the NASDAQ, which I got at the top. So it's been great. But now, today probably going to pop quite a bit, probably pull back a little bit tomorrow and normalize things a little bit. We'll see. I will let you know once I cover that, which are probably going to be soon now. I just put this one in here because this is probably the best read, has the most quotes, best information. So if you want to get information on what was said, what went down, this is the place to get it. Here's some stuff we're going to start seeing real estate wise. Pending home sales fell 20% in June versus a year earlier as mortgage rates soared. So we're going to be comparing. Here's something to keep in mind. When we're getting data that's year over year for real estate right now, we're comparing right now, which is much more of a normal / maybe slightly leaning buyers in some cases, slightly leaning sellers in some cases type market, a pretty balanced market. We're comparing that with an absolute scorching, crazy, flaming hot market of a year ago. So just keep that in mind. So when you see things like, well, pending home sales fell 20%, look at inventory. We'll look at this. Actually, you know what? Maybe I will put, no, we're not going to do it right now. But inventory is starting to not top, but it's sort of starting to round off. They're not getting as many new homes on the market as we've seen. That the acceleration of inventory hitting the market has really slowed. And that was the thing that everyone was really expecting to be a problem. But a lot of that inventory is not serious sellers, not distressed sellers, people who are just, are savvy sellers, or like, you know what, this might be the top. Let's look at selling, moving to this place, moving to that place, upgrading, downgrading, etc. And some people are changing their plans if they're not getting their prices because they're not in a situation where they have to sell, aka no crash here. So just keep that in mind when you're looking at this stuff, because you're going to see a lot of this data and it's going to appear as though it's bad, but really it's just, what are we comparing it to? You always have to know when you're doing a comparison, what are we comparing to, and is it fair to compare? So keep that in mind. All right, here's something you should know. Oh my goodness. This is one of those things that I have been talking about for so long, and it makes me mad in one sense. It really does. But you can't say I didn't tell you that this is the way things were going to be. Now, Blackstone, which has trillions of dollars under management, I think 10 trillion under management, or at least it was before the recent stock market pullback. Now I think it's like 8. But they are basically putting together another fund to buy real estate, and it's going to be tens of billions of dollars. Okay, so this article here from the Journal will show you just a little bit. If you've subscribed to the Journal, you can read the whole thing. But basically, it's this fund that they're putting together to buy real estate with is twice as big as any one that they've ever put together before, and they've already got tens of billions of dollars for it. Now, the concept that they did when raised this, I told you I was getting these calls. Remember, a month ago or 6 weeks ago, I told you I was getting calls from people who were asking me if I want to be a part of a major fund that was going to be by. I don't know if it was Blackstone or not, but if not, then there's other funds raising money too for this, expecting, hey, if a real estate crash comes, if there's opportunity in the market, even if it's here or there, we're going to be there with cash in hand to scoop it up. And that is what is happening. So they are putting that together. Now, the reason why that's important is because I've said before, the floor is pretty much based on forbearance now. Sellers determine the floor. If they don't want to sell, they don't have to anymore. Forbearance all waited out. But the real floor, the more natural floor, is put in by investors. And the bigger the investor, the more real the floor is. These guys putting together massive amounts of money to pick up homes that they feel are at a discount or maybe in distressed situation, that's the floor in the market. So if worst case scenario comes, these are the guys who save the day. Do they save it at this level or this level or this level? We don't know. But we know that they're going to be in there with big cash, just absolutely firing away anything that meets their criteria. And that's the way they roll. So, do I see something like that? It makes me mad in one sense that these big corporations are going to buy all the real estate, because they are going to buy all the real estate. You realize that, right? At some point, they will own such a huge amount of it that you'll be crazy if you're an individual owner to sell anything. You'd be crazy to do it, even though they'll pay you a fortune. You'd be crazy too, because you'd never be able to buy again. And people are going to keep homes in their families for years, decades, maybe centuries, just so they have a place to stay. That is the future of what happens to real estate. And we are on that path. We are on that path fast. That's why I encourage homeownership so much for everybody. Own a piece of this thing, because they don't want you to. They want you to be renters. Let's check on a couple of comments here. Hi, Casey. I'll take a smile from you and the Bertster. Good to see you guys. Andrew, what's your thought on buying a home in September, October, November? Nothing wrong with buying a home anytime, as long as it's the right time for you. Will, that be the absolute lows as far as timing is concerned? Maybe not. Don't worry too much about that. I still think that the remainder of this year, there's going to be opportunities, and I still think that rates will drop in the next year or two. So there will be opportunities to refinance that will save people a lot of money per month. So yeah, September, October, November is right around the corner. My suggestion, if you have a flexible timeline like that, would be to, get your pre-approval done. If you haven't already, get your pre-approval in place, because you're within 90 days of potentially pulling the trigger if you're looking at September. So I think go ahead and do it, get your pre-approval in place, and start hawking the market. Identify a realtor and interview a few if you need to. I can recommend some to you as well if you'd like. I can also do your pre-approval if you like. Make sure you get a good deal. And then what you do is you hawk the market. Have your realtor that you hire hawk the market for you. You also hawk the market. You let them know what you're looking for, where you want it to be, or what type of property you want. And you start looking at everything that comes across the feed. Look at everything. And when you see something that you're really interested in, you see something that's got your curiosity piqued, investigate further, research it, research the area, go look at it, and just become a real estate researcher. That is the best thing you can do in a market like this, because there are definitely going to be opportunities. There's also going to be situations. Look, we got outbid this week. Very solid buyer got outbid. Conventional buyer with 20% down, outbid on a pretty common like $600,000 townhome in Chula Vista. Okay, not in Chula Vista, 92154. So, you know, that doesn't mean the market's on fire, but that means that you're not necessarily, you're not truly going to be in a buyer's market. Like, don't think you're going to go out there and it's like, what was that show? Flip This House. It's not like Flip This House from the early 2000s where you're walking up and going, well, I'll give you half of what you're asking. That ain't happening. Okay. Maybe you can get a discount. Some listings have been sitting a little longer than the sellers have hoped for. Maybe you can come in, make a deal. Those things are happening, but it's not necessarily a market-wide thing. Great question, Andrew. Appreciate you. Mr. Penny, marry the home and date the rate. Yes, us old guys have been saying that for so long. And now it's back. it's come back 20 years later. You marry the home, meaning you keep the home forever, but the rate, you just date it. You can say bye-bye. You can get a new rate. If a new, younger rate comes along, you can get on that rate, and there's nothing wrong with it. Nothing wrong with it at all. You can basically refinance when the opportunity presents itself. So if you get the home that you love, but it's not the rate that you love, if you can afford it, but you don't love it, it could still make sense, because as I expect, within a year or two, there'll be a refinance boom. Get on the other side of inflation. You'll see rates go down. I promise you that will happen. I just don't know when exactly, but I'm certain that it will. So when it does, you'll be in position to refinance, boom. If you're going to be on a path like that, just a couple things to make note of. Like, don't switch to being self-employed or create any other cosign for stuff or do anything crazy with your credit while you're waiting to refinance. Okay. We don't want you to get to the point where you can and then refinance rate-wise, but then you're unable to because you don't qualify anymore. So that's part of the planning aspect that I'll help you accomplish if you're in one of those situations. Thank you, Michael. You the man. Appreciate your input. We are live, so drop your comments, questions in here, and we'll say what's up. Just talking about this Blackstone situation where it says they put the finishing touches on this. I read another article that pointed to this one that had more in-depth. I probably should have brought that one up. I'll go find that and put that in the description too. But it was basically saying that, like, they raised this money super fast. It's done. It's a done deal. Their expectation was they wanted the money in place should there be a real estate crash, should there be a widespread real estate opportunity. Now, these guys are not looking to necessarily go buy one home at a time. They're looking to pick up portfolios of loans from banks going out of business or banks that get illiquid. So, like, if you're a big bank and you service a lot of mortgage loans, you have your servicing portfolio, which you collect income from, right? But if you get short on cash, you can also sell some of that for a bigger lump sum, but you no longer have the income. So it's a gambling thing to do. You don't want to lose that income, but you also need the cash. So they're going to buy money they're going to buy real estate in big money batches, not like one house at a time. So no, Blackstone is not going to pay top dollar for your house. All right. That is not what's going to happen. You're not going to get a knock on the door from someone from Blackstone who comes and pays $100,000 over the last comp. Not going to happen. They are wanting to bottom feed the market. Whether that opportunity presents itself, here's a couple of really interesting scenarios. What if that opportunity does not present itself? What if it does? Okay, if it does, they're going to be there bidding. Okay, they're going to put bids in for large quantities of properties and mortgage paper. But what if it doesn't? Then what? What do you do to your investors who gave you $30 billion and you told them we're going to go buy real estate? What do you do? Let me ask you this. Do you think that Blackstone would just go, hey guys, didn't happen, no crash, here's your money back? Do you think that's what would happen? Of course not. Investment organizations that receive investment money put that money to work. They do not give money back. Now, I don't know what the exact details are. I don't with this fund. But I can tell you this. If they did give the money back, it'd be the first time in history that a large investment company did such a thing. So what if they deploy it? What if they do, in fact, deploy this money into the marketplace? What then happens to real estate? because that is long-term what we should expect. Companies like this buying real estate in huge quantities, scooping up as much as they can, buying it as faster than Bill Gates can buy farmland. They're going to buy homes because they want to rent them to you. They do not want you to own. They want you to rent. That is the goal. The whole thing. There's nothing more than that. So it'll be very interesting to see what happens here. But if you want to be an investor in the Blackstone fund, all you have to do is win the Mega Millions. Look at this. $1 billion. They said the cash option, $602 million. You'd have to pay $400 million taxes. Who cares? Who cares? Give me the $600 million and let's go. I'll call Blackstone myself. Get on this thing here. All right, guys. If you need a loan quote, free loan quote here. Don't need to pull your credit to give you a quote. Can pre-approve you quickly if you need it. Call or text, shoot me an email. If you want to buy or refi, I will hook you up. All right. Save this one. Save this article for anyone you know who's like, yeah, I'm not sure if I want to buy real estate. Well, if you don't want to, don't you worry. Someone else will. That's pretty much all there is to it. If you don't want to, okay, don't. Someone will. And it might be me or it might be Blackstone, but somebody will. All right, guys, have a great day. Check out Dan Parker's channel, 5 p.m. if you want to hear our discussion this evening about what's gone on today with the Fed, with rates. All these numbers will be settled. And we'll talk a lot about the market, what's going on, what we're seeing right now, what we can expect in the next month or two here as people get back from summer vacations and get back into routines. Could be a very interesting finish to the year. So I'll see you guys soon. Take care.